Great to have you join us. Good morning, good evening, wherever in the world you're watching from. It's Business Morning, live on Channels Television. I'm Ladi Williams. First off, let's take a look at what's happening in the markets now. We see oil prices tick down today as investors double down on the possibility of a rate hike by the U.S. Federal Reserve that would stem inflation and curb oil demand. Brent crude futures for September fell 20 cents to $99.37 a barrel, after gaining about 8 cents on Wednesday. U.S. West Texas Intermediate crude for August delivery was at $95.93 a barrel, down about 37 cents, after rising about 46 cents in the previous session. The Federal Reserve is seen ramping up its battle with four-year high inflation with a supersized 100 basis points rate hike this month, after a grim inflation report showed price pressures accelerating. The Bank of Canada on Wednesday raised its main interest rate by 100 basis points in a bid to crush inflation, surprising markets and becoming the first G7 country to make such an aggressive hike in this economic cycle. Nigerian oil rig count rose by 120% year-on-year to 11 last month, up from 5 recorded within the same period last year. That's according to the Organization of Petroleum Exporting Countries, talking about OPEC. This also comes as Nigeria's output, excluding condensates, dropped by 7.6% dropped to about 1.16 million barrels per day last month, indicating against 1.3 million barrels per day recorded in the corresponding period of 2021. OPEC's latest oil market report further indicated that while Algeria emerged as the highest African oil-producing nation with 33 rigs, Libya became the least with only 2 rig counts. And the International Monetary Fund has warned that it may further cut its forecast for global economic growth due to the impact of the Russian invasion of Ukraine, the pandemic-related shutdowns in China, and higher inflation. IMF's Managing Director, Kristalina Georgieva, made this known in a blog post without providing specific figures. The outlook for this year and next is expected to be downgraded after later this month, when the IMF released its World Economic Outlook update. The warning comes as G20 finance ministers hold their meetings in Bali, Indonesia this week. And after the break, we drill down on reports by Smithon and the National Bureau of Statistics showing MSMEs in Nigeria contributed about 46.31% to the country's gross domestic product. We're having that conversation next. That's in a moment. To stay with us. Welcome back now to our first conversation. A report jointly released by the Small and Medium Enterprises Development Agency of Nigeria and the National Bureau of Statistics showed that MSMEs in Nigeria contributed 46.31% to the country's gross domestic product and accounted for 96.7% of businesses, making building financial services for MSMEs in Nigeria even more important. Well, joining us to have this conversation, we have Nkiru Amadi Emina, co-founder, CEO, Pivo Technology, join us right here on Business Morning. Great to have you.
Thank you. Thank you for having me.
Yeah, so looking at this report, it's 46% contribution by MSMEs in Nigeria. How do you see this contribution? Does it meet your expectation?
Yeah, it definitely does. I think it's really accurate. I mean, in Nigeria, there are about over 40 million MSMEs currently in Nigeria, and that number, I believe, is rising on a weekly, monthly basis. And we all know that in any economy, MSMEs are key drivers of every economy, right? From your small restaurant owner to your truck owner to your wholesale distributor of finished goods. So yeah, I think that number is super accurate.
And what do you think can, get this number even higher? Get it to maybe 60% or something?
I think one of the ways to get the number higher is to just, I guess, foster an environment that allows a lot of these SMEs to thrive, right? If that environment exists, you would definitely have more businesses spring up, right? So I think being able to create an environment, economic environment, that allows a lot of these businesses to thrive, that allows and contributes to the growth and success of these businesses, would be a key driver to increase that number from a 46% to a 60% in a matter of years.
Right, and looking at policies now, what would you like to see, that could be a great enabler in supporting MSMEs expand, scale and actually grow their businesses?
Gosh, there are so many things that one would say they'd like to see. I think from a policy perspective, there are a number of things that government can do, whether it's from offering tax incentives, whether it's from ensuring a lot of these SMEs have access to cheap or affordable working capital to help provide some stability and ease in their cash flow burdens. I think another thing that could be super key in terms of policy is creating some sort of knowledge bank that allows a ton of resources to be available to these SMEs to help them build their capabilities, right? I think also from a policy perspective, is just being able to ensure that, there's a safe and secure operating environment for these businesses, whether in terms of security, whether in terms of, an increased level of trust and transparency, right? I also do think that, public-private partnerships can play a crucial role in building these policies and driving the implementation of the same. Interestingly enough, some of these policies do exist, whether it's in access to affordable capital or even tax incentives, right? But one thing we find is that even though these policies exist at a high level, there's no granular implementation, right? So these SMEs don't feel it. These SMEs in some cases don't even know that these policies exist to help them grow and thrive, right? So yeah, these are just some of the policies, I think. Tax incentives, access to affordable capital, access to a wide knowledge bank or knowledge resource, a safe operating or economic environment, and then also just leveraging public-private partnerships to drive the implementation of these policies.
Quite interesting. And, fintech companies are springing up, a lot in Nigeria. How are they helping, MSMEs grow?
I think the beautiful thing about financial technology companies is the fact that we are able to meet these SMEs where they are, right? We're not burdened by, the same sort of issues that a lot of these legacy or incumbent financial institutions have. For fintechs, we are sort of like geared towards understanding what their problems are and ensuring that we're building financial services that meet and solve these problems and that are more importantly accessible to these SMEs, right? Financial services that they typically would not be able to access on their own. So I think fintechs are playing a key role in bringing the financial services closer to these SMEs.
But do you think the legacy financial service providers, are beginning to understand the unique financial needs, and business models of the MSMEs in Nigeria?
So I think legacy financial institutions are starting to understand that. But one of the things that we're seeing increasingly is a push for partnerships, right? So whereas they wouldn't want to encroach in the space that a lot of the fintechs play, they're more keen on how can we partner, to both achieve, the reach that we seek, right? So yeah, I think they're starting to see the relevance of fintechs and are geared toward, establishing key partnerships for success.
And the mindset was, MSME lending, was perceived risky by most of these institutions. Is that still the same perception, we have now? Hello, Nkiru, can you hear me?
Yeah, I can hear you. Can you hear me?
Yeah, did you hear my question?
Yes, I did. Yes,
okay.
I did.
Okay, you can carry on.
Yeah, SME lending is still seen as risky for a number of reasons. First of all, there are not enough data points available that can allow you to adequately assess the creditworthiness of like a small business, right? Assuming you have a mom and pop shop that's like right down the street that needs to access capital to grow his or her inventory. There are just not enough data points to assess whether if I give this capital to this mom and pop shop, number one, they would use it to grow their inventory, and they'd be able to return it, right, without the risk of, defaulting or delayed repayments, right? But the truth is the data points exist, and what we're seeing now is fintechs are starting to play with a wide variety of data points to underwrite the risk that is tied to SME lending, right? If you look at Pivo as an example, what we do essentially is we leverage supply chain finance as a means to give capital to SMEs. And with that, we're able to leverage data around what is the cash flow data for the SME, data around transaction history that the SME has in terms of their business. How much sales did they make last week? How much sales did they make last month? What's their future sales projection, right? We're able to layer that with a level of risk assessment as well of the transaction itself, right? So I think what we're seeing is, the complaint around not lending to SMEs is around not having enough data points to assess whether an SME is creditworthy or not. But a lot of fintechs are now starting to look for alternative data sources to make decisions or to make their lending decisions, essentially.
So what are some of these alternative options, that fintechs are using at this point?
So we've seen use cases where fintechs use data around how much mobile credit does an SME buy, or does this business owner buy on a monthly basis? They use data around like semantic data, right? Tied to their relationships, business relationship, personal relationships as well. You use data around like invoices, right? So invoice data, use data around like, yeah, sure. Definitely seeing so many other trends. I think the fintech space essentially started with payments. But what we're seeing now is, financial technology companies providing a means to save, a means to make high returns on your savings, right? Financial technology companies providing financial literacy, right? So how do you help businesses be more financially literate? You have financial technology companies providing digital lending as a tool. You have them providing investment opportunities, right? So there are so many different areas that financial technology companies are now beginning to explore.
Right, and what about the issue of regulation? We know those conversations are still, ongoing when it comes to, most of these fintechs. How's that looking at this point?
I think the conversation around regulation still boils down to partnerships. Because as you can imagine, acquiring any sort of regulation is quite time consuming and costly as well. So typically what you find is you have a financial technology company layering their product on like a commercial bank that already has the licenses, right? So yeah, that's how we see, regulation and approaching the same. However, the thing about regulation is that it can also be super erratic. So the idea is, how do you continue to, first of all, remain at the pulse of regulators so that you understand what they are looking for and you can better position your business to always be on the right side of that regulatory spectrum.
Right, and the first half of this year has been quite tough, globally, and funding, is still coming into most of these fintechs. We see Nigeria. We see that Nigeria still got a huge chunk of funding, coming into the fintech space. How do you see that funding going into the second half? Considering how tough the first half was.
Mm-hmm. To be honest, I think we might see not necessarily a slowdown in terms of funding, but what we would likely see is a longer process in terms of due diligence from an investor perspective before like capital is released. One of the things that I've always thought about and always said is it's important for investors to use a different lens to look at Africa, right? And to look at companies within Africa. Our problems are unique. Our approach to solving the problems are unique, right? The challenges that we face while solving problems are unique, right? So I think what we would likely see is, a lens shift where there's a unique lens that's being defined to look at African companies and how to invest within the space. And I think we would also see not necessarily a water down of capital, but more stricter due diligence from investor perspective. I also think that what we would also see is, I guess, an increase in local and, I guess, African-focused, African-centric investors. I think we're going to see that increase as well.
Quite interesting. And, looking at the climate right now, what are the sure ways, MSMEs can grow their businesses at this time with global headwinds like rising inflation, central bankers tightening, lending rates at this point?
So that's an interesting question. SMEs face a number of challenges, from starting and even to growing their business. Access to funding is one of them. I think one of the things that, would help solve that issue is, allowing a lot of these fintechs or bringing these lending solutions closer to the SMEs, right? I think now it's widely available. You have more digital lenders springing up with the idea of you want to be able to provide these SMEs working capital. You want to be able to close that gap. So I think one of the things around solving the problems is just making sure that SMEs are more aware of the financial services that are available for them to access. I think in addition to that, being able to position your business for success, right? So whether it's moving away from cash in, cash out model to building in expense management, the basics of accounting in your business to make sure that you're not running like a loss-making venture. So yeah, I think those are like two primary ways. Number one, these financial services are available. They've been made even more available by financial technology companies. So having SMEs understand that they are there and bringing them closer to them, right? And then lastly, just being able to better position your business for success, right? Understand basic accounting, understand expense management, ensure that whatever it is that you're building is profit-making and not loss-making. Cut down any exorbitant expenses, right? So those are some of the suggestions that I have. And I mean, more importantly, you can come and speak to Pivo. We're committed to the success and growth of small and medium-sized businesses in Nigeria and across Africa.
Right. Well, it's been a tough year, and the headwinds, are still there. I guess MSMEs have to brace up this time for what's to come. All right. Thank you so much, Nkira Amadi-Emina, co-founder, CEO, Pivo Technology. It was great having you on the show.
Thank you so much.
All right, now after the break, commodities market update is next, and we're also going to be drilling down on that hot inflation figure coming out from the U.S. That's in a moment. Just stay with us. All right, now let's take a look at the commodities market. We see global stock markets were rattled yesterday with U.S. inflation data hitting a level last seen in 1981. Let's drill down on this and other matters. Now we have Longi, the analyst, financial derivatives company, join us right here in the studio. Great to have you, Longi.
Great to be here.
Yeah, quite a big number. Yeah, we saw yesterday, but it seems it was quite expected.
Yeah, definitely. It was, like you mentioned, the largest increase since was in the 1980s and so on. But yeah, the market barely reacted. I believe the S&P 500 only dipped by about 0.5, 1%.
But they still ended red, though.
It still ended red. Dow Jones only fell by about 300 points. So it was largely expected.
Wasn't as big as a big drop that we would see, normally.
Yeah, it wasn't as big. I think it's more because at this point, the market has priced in that, okay, inflation has gone up, the past 3, 4, 5 months. If the Fed is going to raise interest rates. So the market has priced this in now at this point. We've actually seen expectations rise in regards to interest rate hikes. So we know the Fed raised interest rates by about 75 base points at their last meeting, and it is widely expected that they were going to raise again at 75 base points in their next upcoming meeting. But then, because of what we've seen yesterday, I believe about 76% of respondents that were polled believe that a 100 basis points hike is now on the table. So yeah, that is something we could potentially see.
100 basis points,
Exactly.
and obviously the markets are going to react to that.
Markets will react to that.
Or is that priced in already?
Sort of, to an extent, because, I mean, look at Canada. Canada raised interest rates by 100 basis points for the first time in a very long while, too. So it is widely expected that the Fed could potentially do this. And, of course, the market is expecting this. So, yeah, it is sort of largely priced in.
And it seems to counter that narrative, you know, that they were talking about how inflation in the U.S. might actually be peaking. It seems that's not happening with this.
So one thing that is important is that inflation, what we're seeing is actually, it's a lagging indicator, especially when the Fed raises interest rates. We're not going to see the effect of that soon, maybe 2-3 months down the line. So if indeed we do have a 100 basis points hike this month or whenever, we will not see the effect of that till 2-3 months. So yeah, it is countering the notion that inflation is peaking, but we can't really be too sure of that at this point. Yeah,
it's quite difficult to tell, you know, with all the headwinds still, you know, out there. And looking at back here now in Nigeria, obviously this is going to have an impact, you know, for countries like Nigeria. What are we expecting at this time?
Yeah, so we are projecting an 18.4% increase in. We are expecting inflation to rise to 18.4% for the month of June, largely due to, of course, rising food and fuel costs, and of course because of the impact that rising rates are having on the value of our currencies. Of course, we know once rates rise abroad and currencies rise, the dollar, the DXY index is at its highest level in a very, very long time. This is going to have a dampening effect on the value of the naira and, of course, stoke issues of imported inflation and so on. So this is really going to help drive up inflation domestically. So we are definitely going to see ramifications of that domestically in Nigeria.
And looking at, you know, the MPC meeting that's coming up, you know, next week, do you think we're going to see a bigger rate hike, you know, for Nigeria?
Yeah, it is very likely. The probability of that has increased, especially given what we saw in the US yesterday. We know the MPC rate increased rates by 150 basis points at its last meeting, first time in a very long time that they've done that. So we could see a similar hike at the next meeting, I believe on the 25th or 26th of this month. Or we could see something even bigger, because inflation has refused to let up. Inflation is on a rampage globally. Central banks are raising rates. US Fed, we can expect at least a 75 basis points hike. Bank of England, they've increased rates at 4 or 5 of their past consecutive meetings. The European Central Bank too, they're going to raise rates for the first time in 11 years. So the whole global industry.
Because we see that parity, you know, happening with the euro and the dollar.
Especially, yeah.
And that's because they've not been raising rates.
They haven't been raising rates. The euro has crashed first time, or it's about level with the dollar for first time in 20 years or thereabouts. And even domestically, Ghana too, Ghana's inflation has spiked to a new high, and they've increased interest rates. So we can't very much expect the MPC to follow this trend at their next meeting.
And with all of these rate hikes we're seeing, inflation is still not budging. It's still moving higher. Yeah. What else is there?
So I think it points to the fact that the inflation that we're seeing isn't necessarily a cost. It's not a monetary thing. It's it's not a demand side thing. It's more of a cost push thing. It's because prices are high. So raising interest rates would not have the sort of desired effect that central bankers would love it to have.
Why aren't central bankers seeing that at this point? Aren't they seeing that this type of inflation cannot be fought with rates? Aren't they seeing that?
Yeah, but the truth is there's only so many tools that they have at their disposal in order to sort of affect interest rates. So I mean, we have seen the CBN push out policies to boost agricultural production domestically and things like that. But then in regards to the actual monetary tools in the toolbox of the MPC, there's only so much they can do. And it's not as if the rising interest rates do not have an effect. They do have an effect, the effect is just muted. It's not as much as the central bankers would love it to have.
And looking at, you know, Nigeria's situation now, we've hiked rates recently. We're still seeing inflation go up. And, we're seeing other countries, the US and, other zones, we're seeing the inflation actually go up at this point. So looking at Nigeria's situation now, what else is there? What else can the MPC play with, at this point, aside rates?
I mean, there's always a fiscal policy looking at it from the point of view of taxes, but then taxes are always a very tricky thing to go into or delve into.
Manufacturers are struggling right now with production.
The most surefire way would be to try and boost domestic foreign exchange supply. That would help to provide foreign exchange for manufacturers and importers, which will, of course, help to strengthen the value of the naira and, of course, help to boost, reduce sort of the supply disruptions that we're seeing domestically. So that would definitely help to ease some of the inflationary pressure that we're seeing domestically. But then we do know that the external reserves are down about 3 to 2% or so from the beginning of the year. So the CBN is sort of struggling and finding hard to sort of supply forex to the market recently. So that is a definite problem that is weighing on their ability to defend the naira.
All central bankers struggling, with inflation right now. We're looking at the oil market. We're seeing prices below $100. Will this trend continue?
So right now, it is a very strong tussle between supply fears and, of course, demand dampening, demand for. So, or like we've discussed, issues or concerns regarding to a global recession are weighing on fears, or rather weighing on oil demand. I believe OPEC is set to review their oil quota, so that could help to ease some of the supply concerns that we're seeing. You also have issues in regards to demand in Asia. So COVID-19 lockdowns are starting to peak, and there's a lot more restrictions being lifted in Asia. So this is sort of helping to push up demand. So it's a very mixed bag. Demand and supply fears continue to tussle. But then in the medium term, at least, I do not expect to see oil prices fall significantly just because of the issue regarding to supply, and especially with Russia.
Right. And looking at some of the commodities now, we see cocoa production. There's a risk of a black pod disease, hitting most of the production coming from Cross River State. Tell us about that.
Yeah, so the main thing there is rainfall. So the black pod disease is caused by excess rainfall, and that is what we're currently seeing.
So we're having too much rainfall.
Too much rainfall in Cross River, especially. I think cocoa requires about 1,200 millimeters on average of rainfall a season to grow, and we're seeing about 3,000 millimeters right now in Cross River State. So the excess rainfall is what is boosting, or rather causing this black pod disease in cocoa. So that is something that could weigh on cocoa production, which would, of course, be detrimental to Nigeria.
And I'm wondering, is there any solution to that? Because this is nature we're talking about here. What else can they do?
I don't really think it's something that is within the control of the farmers and the producers. I think at this point it's just sort of to hope, or maybe to try and shelter the cocoa better. I believe international standards dictate about 3% of mold. So black pod disease causes mold in cocoa. So international standards dictate that you shouldn't have more than 3% of moldy cocoa in your entire consignment. So we're seeing about 6% to 7% of mold in the consignments in Cross River State. So it's not really something that they can sort of protect against, but possibly proper or better warehousing might help to reduce some incidents of that.
Right, and let's look at the naira now. We see it fell about 620 on the market we don't like to talk about. How are you seeing that?
Yeah, it goes back to forex supply. So forex supply is down, and what is causing forex supply to go down? We're seeing a decrease in oil production, or rather, so there is some good news on that front. So oil production rose in June by about to about 1.15 or 1.6, about 1.15 million barrels. So oil production rose in June. So that could help to cause some accretion in our external reserves, which could, of course, help to boost foreign exchange and, of course, foreign exchange domestically and so on. But yeah, in the long term, the main issue there is, of course, the issues regarding to foreign exchange scarcity and so on. But I mean, it's not such a bad thing, because I mean, lower currency helps to reduce imports and, of course, helps to boost export. So it's not all bad on that front.
Well, because we really need to reduce imports,
exactly.
At this point. Yeah. All right, let's look at the domestic commodity price movement. What's happening there?
I think prices are rising, and of course, this is where it's stoking inflation. And it goes back to what we're seeing in regards to transport and logistics costs, especially diesel. We know diesel is basically the fuel of the country. Diesel powers generators, diesel powers transportation vehicles, and so on. And because we're seeing diesel prices so sky high, this is, of course, adding or rather exacerbating transportation and logistics costs,
right,
which is trickling down into the domestic commodities market.
Okay, what about the international agri-commodities? How's that looking?
Yeah, so we're actually seeing prices starting to moderate on the international front. Factor of different things. So grain prices are starting to drop a little, wheat has started to drop a little, and it goes back to increased production from places such as the US, and increased production from places such as Argentina and Brazil and so on, all these major producers. So we're starting to see the shortfall that was left by the whole Russia-Ukraine crisis starting to be filled up.
Right.
And also on that front, I believe there's been progress made between Russia and Ukraine talks in order to allow grain exports from Ukraine. So the progress that has been made in that talks sort of helped to curtail or rather dampen prices a bit more. And at this point, it's very optimistic that the talks might end up passing through. So if we do see those talks pass through, there'll be a larger return of Ukraine and Russian wheat and grains back onto the domestic markets. So that is something that
because I know they're having
prices.
talks, you know, at this moment to see how they can let some of those grains out. If they let those grains out, hopefully we can have lower prices for you know, most of these commodities. But can they maintain this? Because I know Russia is quite unpredictable at this point.
Yeah, very. I think something that's about common knowledge around Russia and Ukraine account for about 20%, 28% of global grain, wheat supply specifically. So yeah, the talks, like you mentioned, Russia is a very volatile partner,
right,
very volatile party in these talks. But then it is important. I mean, Russia is cash strapped at this point, so I do believe any sort of avenue that they can get to sort of win back some international favor, I do believe it's something that they might be willing to take.
They really need that, you know, at this point with all of these sanctions from all over the world. Thank you so much, Longi, the analyst, financial derivatives company. We'll keep tracking that market. Thank you so much.
Pleasure.
All right, now let's head on to the market. We have Will right there, and Will, it's the first day. As expected, I saw this coming. 90 billion wiped off the market cap there.
Laddie, you know that we were tracking the market and we saw that at the close of the bell at 2:30 yesterday, we saw the market close at 0.02% up.
So
it was positive,
flip,
but it was very brief, and the market just went plunging down 0.32% in negative territory to close the market at 51,390.25 points. Now, this was because of sell-offs in Boa Cement and Access Holdings. Boa Cement was down about 3.6% yesterday. Access Holdings down 2.1%, undermining the market's performance and making the market start off the holiday shortened week in negative territory. We see year-to-date, month-to-date has also, you know, the loss for the month-to-date has also risen by 0.8%. That's adding about 3 basis points to it, and then the month-to-date, year-to-date return has lost about 4 basis points. Now, the total volume of trades traded yesterday, stocks traded yesterday, rose by 72.7% yesterday. It was green activity chart for the market yesterday. That's indicating the sell-offs we saw in the market. Profit taking is still on. Intense pressure is there for stocks. Value 2.18 billion naira and all in 4,700 deals. GTCO was the most traded stock by volume and value at 51.8 million units yesterday. 1.08 billion units of its shares was traded. 1.08 billion naira of its shares was traded yesterday. Analyzing by sectors, we saw that the banking, consumer goods were the only greeners yesterday. I would say that if I borrow that word. Industrial goods, insurance, and oil and gas were in the red. And no thanks, we don't know what to, some stocks that are, the big names that investors are taking profit from there. And we move on to the NASD market. We saw that traded in positive territory, contrary to what the equities market did. But we're bringing on Abdulrasheed Momo is joining me now to talk about what's going on in the market. Abdulrasheed, let's start here. Intense profit taking still on for the market for equities. Any end soon?
Hello, can you hear me? Good morning.
Good morning, Abdulrasheed.
Okay.
So I'm saying intense profit taking is still on for equities. Sell-offs are still on there. Are we seeing any end to this anytime soon?
If you notice the last time I spoke, I told you the market was playing the same script it did in 2006, where market about 54,000 points, and we sought correction towards about 50,000 points or 48,000 points. So far, and this same thing, when it happened in 2006, it actually took about 6 months from the period of June, no, let's say 2007, from the period of June to November, before we saw a new trend come up. So what you are seeing, market is going to consolidate within those levels. It has hit 54,000 points, and we are within about 51,000 points now. We expect this correction to go at least to about 50,000 points. We're not going to see any new highs within this period. Corrections will still keep going on. But I know at the end of that tenor, within that September, November, we need to, by then we'll know the actual picture the market is going to paint. But that same period when market consolidated for about 6 months, that was when the market broke out the 55,000 points and went to an all-time high of 65,000 points. But for now, we need to concentrate on the consolidation phase, which we are facing now. We don't see anything that's going to change. It's just going to be, we call them for traders, when you buy low and you buy low and you sell high, but the profit margin is actually very slim. So that's where we are now. This market as it is now is for professionals who know how to trade, because most of these stocks are trending. They have range bound. They are lower, low and highs, but they are still entry points going and out.
Okay.
For investors, it's just a buying to wait.
So we're saying that investors, we need to be professionals, probably learn the ropes to be able to profit from this volatile market. And the inflation data, moving on, inflation data is just a day away. What are you looking at, Abdulrasheed?
With all what's happening now, there might be a continuous rise, I guess. But you know, as I always tell you guys, I work with data. The long-term effect, the market is still bullish, but the short-term effect, the market is bearish. And I said there's strong support line from 2020 till date that has not been broken. As long as that market is, as long as that support line is not broken, the market is still good.
So what's the outlook for next week? You're saying, just tell us what to expect for next week's trading.
Let me tell you, I've told you 50,000 to 54,000 points is what we are going to watch. If the market can hold within that 15,000 points, then it's good news. If it breaks, sad news. But for now, the market has not broken that level, so I cannot. There's no confirmation yet to get a confirmation before I can give you another story. But for as it is now, the market is consolidating, it's range bound, support levels not broken, resistance levels not broken. So we are just range bound.
Thank you so much, Abdulrasheed, trader TLW Stockbrokers, for that insight. And the markets, not so good positive news for the market, but the NASD market, we still see positive news, closed in the green yesterday, as I was saying, 0.9% up, almost 1% following the Muslim holidays. The index added 1 billion naira to the market cap, raising it to 1.03 trillion naira. But however, we saw a drop in the value of goods traded yesterday. It was down about 3.3%, but volume jumped by over 800% yesterday. 10 deals traded yesterday. But the fixed income space, the bond market opened on a calm note, you know, as market participants paid attention to the NTB auction, that's the National Treasury Bills auction, which held yesterday. However, yields continue to trade at elevated levels, you know, more bearish undertone we're seeing there. The most active papers were across the 2027 and 2042 papers. We saw 8 billion naira traded 96.15. That's the price high we saw yesterday. And just a few trades were consummated owing to the sustained gap between the bids and offers across the curve. Treasury bills, we can see that that is still, you know, It's still very, very bearish there. 7.5 billion naira traded, and the high of 11.3%. That's double-digit figures we're seeing for the Treasury bills market, and the investors are positioning. But what the results were not so good because there was not a lot of demand for the stocks, for the papers. The investors, the Treasury bills. I mean, the DMO was only able to sell what they offered. You know, there was not an increase, no overbidding there, and the markets, you know, probably closed on a flat note. So, Ladi,
right.
That's what we're having to you.
All right, well, I'll be looking out for that 50K level, as Abdul Rashid has said, because he also predicted what we're seeing right now.
50K level.
So if 50K is broken, then, you know, we'll see 40s, I guess.
Free falling, I don't think I want to see a free fall from that. I'm not looking forward to that.
One good thing he said is long term, the bullish trend is still intact. So it's just for the short term trades might see all this bearish sentiment. All right, Will, thank you so much. Okay, after the break now, we'll head to London. That's in a moment. Do stay with us. This is Business Morning. All right, now let's head on to London, where the cost of living crisis is still very much present there. We have Juliana standing by right now. Great to have you, Juliana. Good morning. Well, some of Northern Ireland's most vulnerable households will start to receive the first of 2 cost of living payments from today and moving forward. How's this being received over there?
It's being received pretty well, I would say, though it's not just the north of Ireland that are receiving these payments. It's about 8 million families across the entirety of the United Kingdom. I believe about 1 in 4 families. This is all part of the former Chancellor Rishi Sunak's cost of living package, so it's £650. But between today and the 31st of July, families will be receiving £326, and they'll receive a further £324 in the autumn. And as I said, it's all part of this cost of living package that the government were dragged kicking and screaming to try to give people, because of course we know that so many people are struggling with the cost of living crisis. I believe these statements everybody should know at the moment, you know, 9.1% inflation, which is a fresh 40-year high. And if you go to the shops, it feels much higher than 9.1%. It feels in some places about 50% higher. And I think one of the reasons why it is significantly difficult for families at the moment are energy bills. Energy bills are expected to rise for the second time in autumn to above £2,000, and then for a third time in January of £3,000. So this £650, some would say it's just nowhere near enough. But if you do fall under other categories like being disabled or being elderly, then you could receive up to £1,200 from the British government by the end of the year.
Quite interesting, and some analysts will say we got here because of these kind of payments. Well, we'll see how that goes. Private rents in UK, they've also reached record highs, with about 20% rises in Manchester. How are you seeing this?
Yeah, it's pretty expensive to live in this country at the moment, and especially if you are a private renter. I believe there are about 11 million people that are renting privately in England, and if you are somebody that moves year on year, you will see that there is a significant increase to the amount you're spending. You talk about Manchester, which is the third biggest city here, but in London, renting has increased by about 16% year on year. So to rent an average a flat or a home in the UK cost about £2,200, which, if I do my little calculations, that's about 1.6 million naira. That's how much you have to pay every month to try and live in London. And one of the reasons why is because there's just not enough properties. I think property demand, or to rent a property, is increased by about 26% year on year, and there's just not enough supply to have the demand. So a lot of landlords now are in a pretty comfortable position, and they are increasing the charges, and people are having to pay for it because, of course, they need somewhere to live.
Yeah, quite a good time to be a landlord over there. All right, Juliana, thank you so much for the update. See you at 1:30.
See you then.
All right, now let's take a look at other markets. Now we see in the crypto market, we see Fear Grid Index at 18 points over 100. That's an improvement from what we saw yesterday, about 16 points. We're seeing a little green in that market at this point. Market cap up about 2.39% at $892.72 billion. And we see volume traded, that's Bitcoin plus the altcoins up about 35.33%. Bitcoin dominance sits at 42.76%, still inching downward there. Let's look at the price of Bitcoin now. We see it's $20,019, down 0.40%. We see Bitcoin extended losses and traded below the 19,200 level against the US dollar, but found support near 19,000 and started an upside correction. And we see Bitcoin now trading at, it did drop as low as 18,916 and started an upside correction. The price is now trading above the 20,000 level and testing the 100-hourly simple moving average. There was a break above a key bearish trend line with resistance near about $19,400. So still eyes on Bitcoin as the market is still quite volatile. Let's look at the top alts by market cap now. It's all red on that counter with BNB trading at $230.72, down 0.12%. It's all red, you know, on that counter with XRP still holding strong to that 30 cents range. Let's bring in Olumide Additional now, financial market analyst. Hello, Olumide, great to have you.
Very volatile.
Yeah, quite a volatile morning we're seeing here. And, you know, obviously that U.S. inflation data came, you know, really hot. And but it seems Bitcoin is holding up pretty okay. We're not seeing like 5% drop this morning.
Yeah, but if you look at recent price action right now, Bitcoin is hovering below the support level of $20,000. That just tells you that investors are digesting the reality that the CPI index trading at 4-decade high means that the U.S. Fed might even increase interest rates by 100 basis points, and that pretty much is why we're seeing moderation in the in today's trading session. But having said that, I think you know, understanding the liquidity crunch not just in the crypto market, in many markets, it becomes a point where investors rather will stay on the sideline, and that's why we're seeing prices being ranging below that region. But market pundits will tell you that it's very likely that Bitcoin drops to the demand zone, and that is telling you 18,000 below. That's because it seems that Bitcoin is not able to hold that support, because seeing those price testing at that region tells you that we are seeing whales now becoming very shaky. You know, a lot of retail investors have sold their positions, and where we have right now are big bad players, and the market is looking very, very painful right now for these players.
And some analysts say, you know, most of these big players are sitting on a lot of cash on the sideline, you know, at this point, you know, looking at the equities market, you know, the crypto market and most of these asset classes. When do you think they'll start, you know, scaling in with all of that cash?
Well, it doesn't look likely soon, because, like, you know, the core inflation tells you that investors will rather focus on necessities and try and have a risk-off mode sentiment. And with the US dollar hovering at record high, it pretty tells you where investors are putting their money right now. So it's very unlikely for us to see the bullish rally we saw in 2021 playing in 2022. But having said that, you know, systemically, we are seeing selective hedge fund players picking on key assets, particularly Bitcoin and Ethereum. So market pundits will tell you that the Ethereum merge might really see some upside in that, and we still see blue chip NFT still getting the swag despite the bearish market.
Right, Olumide, and obviously the first half wasn't so good for most of these risk assets. We're in the second half now, and it's still not looking good. Olumide, where do you see the light at the end of the tunnel?
Well, that's a very tough question, but
I know.
I think one thing will play out. As long as US inflation still remains high, we're expecting continual moderation in crypto prices. However, you know, some economists pundits will tell you that it's very likely the US inflation data might peak in some months' time. That will really give some respite in the crypto market. But the way the narrative goes, it's very likely the flagship crypto in Bitcoin stays below $20,000 this year.
Right, and most analysts will say you should stay in fundamentally sound stocks at this point. You know, the ones that are paying, you know, dividends. But how do you find this alternative in the crypto space? Where do you find, you know, such altcoins that can actually, you know, give you some respite in this tough time?
Yeah, just like you said, so we have blue chip crypto assets, and just for namesake, crypto, Bitcoin and Ethereum seems to be the leading ones. Then also we have blue chip NFT, like the Bored Apes, that attract institutional and big time investors. That really will stand the test of time. But you know, one of the exciting things about this market is that the crypto regulation brought in by US regulators suggests that many crypto assets will be ranked as commodities, and that will give some respite to some of these leading altcoins too. So I think what investors should be looking at right now is entering the market with their toes rather than their legs, because the market still shows that the risk volatility is still much in play.
Right, and it's crazy because some investors don't even have toes to go into this market at this point, Olumide.
Yeah.
All right, Olumide, thank you so much. Always great to talk to you, Olumide.
Same here.
All right, now let's look at the top 5 gainers. We're seeing double-digit gains, even though it's a red market. We're seeing Matic there up about 15.60% at 63 cents, and curved out there, $1.03, up 14.32%. We also see Aave on that list. So there's some gains being made, you know, with some of these altcoins. Flip over to the top 5 losers. We see it's that stable coin, the USTC Classic there. It's 3 cents. That's supposed to be a stable coin of $1, but it's down about 11.97%. And we see Gala there down about 2.31%. One of the play-to-earn platforms, and eCash there down 0.75%, less than a cent. All right, that's it for the market now, and that's a wrap on the program. Don't forget to join us at 1:30 on Business Incorporated. We'll have Willie Bong there giving you updates and developments in the world of business. Thank you for watching. I'm Ladi Williams. Bye for now.